The property analyzer helps you analyze the financial viability of any property you plan to buy. It pulls in live data from SuburbsFinder, things like 10-year average growth, stamp duty, buyer's agent fees, rent per week, vacancy rates, and typical holding costs. You can edit these, add recurring costs, property management, land tax, depreciation, even LMI. Start with the property details: purchase price, deposit or equity, upfront costs, and the 10-year average annual growth. Next, add your loan details: loan type, repayment amount, interest rate, and any extra repayments you want to test. Finally, enter your taxable income. This is what lets the analyzer calculate your after tax cash flow, the number investors really feel month to month. The results table runs across years 1 to 10 with assumptions clearly shown. Rows include deposit and equity costs, average growth, after tax and before tax cash flow, interest only cash flow, projected property values at 5, 10, 20, and 30 years, and net rental gain or loss. Figures are color coded. Green is positive, red is negative. Beyond the table, the analyzer gives you graphs backed by blue box summaries. The table shows the numbers, but the charts and their blue box callouts show the story. They spell out what your repayments mean, when cash flow flips, and how equity builds over time. The first graph is the investment property analysis graph. The blue line projects market value, the red line shows your original loan, the yellow line shows how the loan shortens if you add extra repayments, the green line shows usable equity. The blue box takes the guesswork out. It spells out your repayments today, what happens when the interest only period ends, and how much total interest you'll pay. Add an extra repayment and it even tells you how many years you shave off your loan and how much interest you save. It also shows when the property is likely to double in value based on the 10-year average growth you entered. This is where you see the impact of extra repayments, interest costs, and growth all in one snapshot. The second graph is the mortgage composition graph. This one breaks down where your repayments go, interest, principal, and any extra repayments. It's more of a supporting view, helping you visualize how much of your money is going to the bank versus paying down your loan. You can toggle each element on or off to focus on what matters. The third graph is the estimated cash flow graph. Here's where most investors lean in. The graph compares interest only versus principal and interest cash flow, both after tax. The blue box breaks it down for you. It shows how long your cash flow will stay negative and the total dollars you'll burn through, whether you're on interest only or principal and interest. And it tells you the exact year your property finally flips into positive territory. This isn't guesswork. It shows your total negative cash flow in dollars and the exact year it flips into the green. Stress test it by adjusting the interest rate. Lower from 6.7% to 6% and you might hit positive cash flow in 2033. Bump it to 6.5% and it might not turn positive until 2044. The box updates automatically. You can also play around with the display settings. Choose which years to show in the table, toggle projected property value on or off, or focus only on the data that matters to you. You can also save your analysis into My Property Analyzer, reset all inputs with one click, or export everything into a detailed PDF report. And if you're happy with the numbers, click View Suburbs. The platform will reverse engineer your strategy, showing you suburbs that match your assumptions. The Property Analyzer combines every angle: what you enter, what you see, and what the blue boxes explain. It's not just a calculator, it's a decision-making tool, showing you whether a property truly fits your strategy today and decades into the future.